Please read this disclaimer carefully before proceeding further. Welcome traders to this tutorial video. In this we are going to see the importance of a very simple tool which we call as 200 moving average. Now this is one of the simplest tools that you can use in technical analysis, and traders have different kind of perceptions around it. They use it in different ways. A lot of traders say that 200 moving average is if the price is above it, then it is bullish. If it is below it, then it's bearish. It can act as support and resistance and all that. So let's quickly see how you can put it on the chart and how it can actually play in the market to give you good profit and targets, and in fact actually good trading opportunities. So let's look at an example of gold, which I've been actually looking at, and I've been posting analysis of this on the YouTube channel for a long period of time now. So let's look at it. So how do you actually add to this? Now if you come to the moving average, if you come to this scripts or indicators here on any platform, you should be able to find moving average. We are going to use simple moving average, and we are going to customize it to 200. Let's change the color of it so that it looks a little different, and this is how it is, right? So we are currently on weekly time frame, because if I go to the monthly time frame, there is not much enough data. There are no 200 months here in the chart. That's why it cannot calculate. If I come to the weekly time frame, we have data for 200 candles. Now when you click on it, it shows input as 200 moving average, source is closed. That means it is calculating. The moving average is basically getting calculated on the close price of current and previous 200 candles, including the current one. So that's what it is right now. So if I look at the weekly time frame, this is exactly where the moving average is. Now always remember that moving average is dynamic in nature. As the candle prices are coming in, it is being calculated with each candle on the time frame that you're looking at. So that means this is the approximate level where it can fall to. If the market starts to fall, then 200 moving average is going to attract the price towards it, and this can act as support, but this can move. So when the price starts to go down, this 200 moving average can actually move up and down based on the new candles data. So approximately for now, the current target can be 12, but I'm not saying that it will actually fall there. The question is, the question that you should be asking is okay, fine, if it falls, then where it is going to go? If it starts to fall, then 200 moving average can act as support. Right now, because the price is above 200 moving average, this is still bullish. If I go to the daily time frame, there is no surprise that the market has come to retest the 200 moving average, and it is now showing a sign of rejection. There is a bearish candle. So far it has been bullish, and this is what I posted in our analysis, gold analysis as well. The market was expected to come to 200 moving average around 1826 at that point in time, and then it was supposed to show some rejection. Okay, so that means if you were going to take a long from here, and if the path was clear, there was no specific barriers along the way, then this was going to be your profit target. And once you have gone there, you knew that the market was going to show some kind of resistance, so you could have planned for short entries there as well, or at least you could have taken the profits on the long trade. Okay, now let's go to the 4-hour time frame. On 4-hour time frame, similar sort of thing is happening. For a long period of time, the market was away from 200 moving average. It came back here, got rejected, tried to go back up above it, got rejected, and now it is again struggling with it. So right now this is struggling. This entire area is basically 200 moving average rejection area, because if I go to daily time frame, that's exactly where 200 moving average is. On 4-hour, that's 200 moving averages. Okay, so that is how you can play 200 moving average to find your support and resistance. However, let's look at one more thing. Remember, we just saw that the market is falling after hitting the 200 moving average, and it has been falling to this place. So this is a level where the market came to. Let me just quickly change the color. So the market came right into this level. So what was special about that? Let's find out. If I go to the 1-hour time frame, the 200 moving average is right there. So that was not it. Let's go to 30 minutes. There is no surprise again that 200 moving average has acted as support again on 30 minutes and pushed the price up. So daily time frame pushed the price down, daily and 4-hour time frame pushed the price down and got supported by 30 minutes 200 moving average. Another thing, if the market is going upwards from here, you see it has tried few times to actually go through this level. Now why is that happening? It's happening because if I go to 15 minutes, again 200 moving average, the market fell down. This is the 30-minute area. It went up to retest the 15 minutes 200 moving average. So far it was above, now it has fallen down, and the price has come back up to retest 15 minutes moving average. It's very, very simple. Every trader, in my opinion, must have this tool on their charts. This is very simple. All you have to do is just go to your charting package, whether it is MT4 or NinjaTrader or Thinkorswim, anything basically, because all of those charting packages do support moving average. Put simple moving average. Do not try to experiment with EMA and all that, right? Because simple moving average works the best. So just go and put 200 moving average in there, and it's part of our training program as well. There are few moving averages that we make use of in our FCP analysis, and 200 moving average is one of the best tools that we use. Okay, hopefully you enjoyed this educational video. If you did, make sure you hit the like button, share it with other traders and trading communities, and put a comment below this video telling me how you found this video, like whether you found it educational or not, whether it helped you or not. Okay, and I'll see you in the next video. Thank you for watching. Find and follow us on these social media channels.